All right, guys, welcome back to Mike Fitzpatrick team. Today is Tactic Tuesday. Today, we're going to learn more about mortgages, why they're important, and what you need to know. First, I want to introduce Deanne Caceres. She's the mortgage mom. And also Kim. She's the behind-the-scenes person that will be handling and processing your loan. So some of the questions that we're going to go over today, we're going to explain the importance of starting and keeping good credit and why that's important for you to get a mortgage. We're going to talk a difference between a national company and a local company for mortgages. What are the do's and don'ts about the loan process? What does the underwriter do and how can we make their lives easier? Because if we make their lives easier, our lives are going to be easier because we don't need to get them documents. What is a discount point and how does that affect my rate? How do escrow accounts work? And we're going to talk about what loan programs that you have to offer everybody. And then we're going to go into what other incentives that you offer and why is it important to be a past client of Green Tree Mortgage. All right, Dan, I'll hand it over to you.
Thank you, Mike. Very excited to be part of your Tuesday Tactic. And we have Kim Welding here. We make up Team Mortgage Mom. So there's basically no I in team. We work together. We've been working together for many, many years. And we're a great fit. So Kim takes care of all the intricacies of the actual process. I'm not a very detail-oriented person. Don't comment on that, Kim. But Kim is extremely detail-oriented, which is why we make a good fit. But just to give a real quick rundown, with our company, Green Tree Mortgage Company LP, everything that we do is in-house. So all our underwriting, all our processing, I mean, we basically have the bat phone to the underwriters, which is amazing because if there's something that we're not sure about, something we might have a question about, we can pick up the phone and get answers right away. So we're not packaging up our loan to get approved and sending it out to California. You know, we're not an internet company. We are very, very hands-on. So today we're going to basically go over some of the details of a loan because people think it's, especially in today's age and the market, that it's impossible to get a loan. So we're going to squash some of those ideas and show people, you know, actually how easy it is to get a loan. So one of the things I know you asked is, you know, as far as credit, and that's, you know, one of the things that Kim is excellent. She can take a look at a credit report, you know, basically tell what's going to happen, when's the score going to go up, and how we can help these people. So Kim, why don't you introduce yourself, give a little bit of background, you know, how fabulous it is to be on Team Mortgage Mom. And
well, I've been with Deanne now for over 10 years. And I do specialize in, you know, we start from I also have an assistant we work with as well. She helps out as well. So you hear from them in the beginning. We collect all the documents and then we, you know, and getting to the credit part of Green Tree, like that's just the beginning and the most important part. And the biggest thing with us is if you aren't ready yet, we're going to get you on the path to purchase a home. It might not be today, it might not be tomorrow, 6 months from now, 12 months from now. Going back to what Mike says, when you work with Green Tree, it's a family. We're here forever. You don't go away. You're always our client. So just remember that once you join Team Mortgage Moms, you know, our customers, you're forever. And
yeah, we don't let them out, Mike.
No, we're not gonna let them go.
So, question when it comes to the credit, because I remember when I was a kid, when I was coming out of high school, got my first credit card, woohoo, went out, bought stuff, going to college. Oh, wait, I can go to college and I don't have to pay for money. I just got to sign this paper here. Oh, that's awesome. And then the years build up and my credit score was not important to me until it became important when I was going for a car, when I was going for a house.
Sure.
And I'm like, okay, you're a 660. Well, I'm like, all right, that's cool. He's like, no, it's kind of low. You actually want to be somewhere in the high sevens. Oh, all right, what do I need to do? So the people that are watching this, even though we're not going to have a bunch of high schoolers watch this, the parents will. the parents need to take that education. You want to give them a better future. You want to start them off at an early age. What's the difference between a credit card and one of those secure bank cards? Why is it important to save money and also establish credit but pay it off? And so this way, when you get out of college, you have a pretty good head start.
Absolutely, Mike. It's funny you say that. My nephew is 15 and I've already started instilling in him the importance of banking and getting a good credit score and adding him on to, authorized user accounts. So but by the
That's
time
awesome.
he does go to college, and it's important because I explained to him the importance of having good credit get you places in life, and it gets you in our industry, it gets you better rates, it gets you better approvals, things like that. Like once you have good credit, you need to maintain it. And like I said, we have systems in place that if you don't have a good score, we have what's called a credit simulator, and we work with you. Okay, pay this debt down, close that account, we tell everybody what we need to do to get them where they need to be. And the most important thing I think in the mortgage business is, maintaining a good score. Don't miss any payments. If it's a struggle, just make the minimum and don't miss anything, because those dropping scores, we see a lot of times people who they missed a payment and it goes into collections, and then from collections your score's dropping 100 points. I don't care what they say, the collections, they hurt your score.
Yeah, and that's a good thing to bring up, because all these people that like to cut corners and take the easy way, this is definitely something that can hurt you in the long run rather than just make the bare minimum payment. Everybody remembers during COVID, the governor and the mayor said, hey, don't pay your rent. No.
Great idea.
And even if you don't have to pay the whole card off, but let's say your minimum balance is like $46. By you making that $46, yes, you're going to get charged that interest, but that's going to be minimal compared to you missing a payment, getting a penalty, your credit score going down like 5 to 10 points, and now you got the collection agency after you.
Exactly.
That's something you don't want.
Exactly. And we see collections on there all the time. Deanne, aren't they supposed to be dropping off these collections, the medical collections?
Yeah, we're waiting, but they haven't gotten rid of them yet. But Mike, also, if you look up the definition of credit, it's, the ability to make payments over time. So people think because they have a lot of cash that they can purchase a home, but when it comes to getting a mortgage, it's all based on the ability to make that payment. And that's really what the underwriters look at. And it's funny because we have couples that, want to buy a house together, and maybe they're just engaged or they're not even engaged yet, but they're like, what? He's got a credit score in the 500. If you're looking to partner with somebody, get on Credit Karma, find out what their credit score is, because that person is just going to bring you down.
You're going to break up.
That's going to have to be the requirement. So while you have the box, you also have to have a bigger box showing what your credit score is too.
Exactly.
Like,
that should be on like Match.com or whatever those dating sites are. What you think your FICO score is.
Yeah. That's my understanding. So getting back to that, like what we do is after we pull the credit and after we collect all the documents, we have a system, it's called desktop underwriting, which, is monitored by Fannie and Freddie. We have to run each profile through their systems, which gives us the approval or a denial. And from there, that's when, I'm not going to say I haven't seen, ineligible people, but what I do is work with them to figure out what the system's looking for. Is it looking for more reserves? Is it looking for other things? So even though maybe their credit score isn't in the high 700s and it's not approving now, we figure out the way. We figure out a way to get this loan done for them.
So when you say desktop underwriting, what are the most important things that this looks for that someone can, get a heads up on?
So it looks for good credit. It literally goes through your whole credit. And if you have a bad credit profile with a lot of, collections and stuff, they don't like that. the lower your ratios are and the more your reserves are. They really like someone who isn't going into the house being house broke at the end of the day.
Right.
You know, they have no reserves. They have no security if something is to happen. We see it every day. You know, we have borrowers, oh, the roof leaked. I need a new roof. Well, you know, those are things that you have to maintain.
Okay. All right. So we established good credit now. All right. We got good credit. We're coming to you now to get pre-approved. Okay.
Yep.
Sorry about that. Someone trying to call in. So we're coming to you to get pre-approved. Now, most likely you're going to ask me some information and probably take a mortgage application. But what is the process of getting someone into your system? And what loan programs do you have available for people?
Okay, so after we collect all the documents, we basically go into figuring out which system is, you know, which loan program
Which
is
loan?
best for them. Are they a veteran? Do they fit in the VA program? You know, it's 100% financing. It has a funding fee, but there's no mortgage insurance. So there's a benefit to that if they're eligible to be exempt from, you know, their funding fee. Are they not? So that's one of the benefits. Then we have USDA. Where are they purchasing? Are they purchasing in a rural area that they may qualify for 100% financing where they have no down payment? Or is it, you know, maybe they have the lower credit scores and they don't have a lot of money to put down, so they fit in our FHA program. So we kind of go through each one to see where they fit. We also have conventional. I know Deanne's probably going to say this. The biggest myth in conventional is you do not need 20% down. You don't. You can put as little as 3% down, 5% down, up to 20, up to 50, whatever you want to put down. It all has different programs. So first time home buyer programs, you have Home Ready and Home Possible. One's by Fannie and one's by Freddie. They all offer different things: low down payments, low mortgage insurance, and lower rates, which everybody wants. That's really, everybody wants the lower rate.
Yeah. And like,
Okay,
you know,
great.
it's not just, you know, one loan fits everybody's needs.
Oh,
So as I mentioned in the beginning, we collect all of their documents up front. We're going through the pay stubs. We're finding out if they have alimony. Are they paying or receiving child support? We need a 2-year history for where they've lived for the past 2 years. We need a 2-year history of where they've worked for the 2-year. Like, what kind of job stability do they have? Now, someone coming out of college obviously isn't going to have a 2-year history, and that's okay. But my point is that all of this is done up front. So, you know, a lot of times you deal with all these internet companies, they don't even bother. Hey, what's your credit score? 750. Where do you work? Okay, great. And they're issuing these pre-approvals or these pre-qualifications, and they're not worth the paper that it's written on. You know, we take those steps to verify the tax returns, verify that they have assets to close, you know, verify their credit score, verify their job history. All of this is done up front so that when you take your buyers shopping, you have a peace of mind as the realtor. You know, how much of an offer can I put in? You know, what's their maximum payment? What's their comfort level? Because, you know, coming to us is like coming to a doctor, a little less painful, but coming to a doctor where we're asking all these questions up front, because this is one of the biggest financial decisions they're going to make, and they need guidance. And I know, Mike, that's one of the things that, you know, you're a big component of, is educating them, guiding them, and teaching them. And that's why we all work together so well, because we want what's best for the client. And it's nice to go to sleep at night knowing that the only thing our buyer now needs to do is put an offer in, get an appraisal, get a home inspection, get title insurance, because on the lending side, they're good to go.
yeah.
Right. So
Everything's done up front.
you brought up a good point before. So basically, I am like the analogy king. I like to put a story so this way people can relate to that and then understand what I'm talking about. But you brought up a point. So you have to, you basically get like 60 days of bank statements, a couple pay stubs, and you also get 2 years of bank statements. The reason for this is because, like, when I use this analogy over the weekend, I basically said, hey, look, I'm type 2 diabetic, and I want to be done with it by the end of December. Now, could I cheat? Sure, I could. Every time I take a glucose, I could just, not eat, or eat the right thing, and I'll be done with it. But when I do that A1C, that's going to tell me the true amount. And that's the whole thing. Like, you can make like $600 or $200,000 in 6 months or a year, but that's why we need last year's tax returns. We want to see actually how much you're making, where that downfall hit, or where that upfall, where you gained, where that came from. Because underwriters want to see credit and cash flow coming in something like this, not like this, because then you become a high risk.
But like that also protects the buyer.
Right.
You're protecting the buyer, because then it goes back, to 2009, 2010, where people had a pulse, they were getting a mortgage.
Yep,
and then
correct.
and then something happens and they can't make the mortgage payment. So not only are we protecting the buyer, but sure, we're protecting the company. It's got to be a win-win, and there's got to be a sense of security. Again, this is one of the biggest financial purchases that they're going to make. And it's not something where, you're there for 30, 60 days and say, nah, I don't want to do this anymore. I mean, you could, but it's not going to be in your best interest. This is about creating wealth. This is about a financial plan.
Right. And
All right. So I got
the whole underwriting thing, that is like providing that document to the underwriters up front is one of the most important things. And it's funny because I ask an underwriter, what is it? Just give us everything. Like, tell us up front, because if you hide things from us, we get to the finish line and now we have a problem. You tell us everything up front. We work together at Green Tree to figure out a solution to get you in a home, because that's the ultimate goal, is to get you in a home.
Yeah.
That's one of the reasons why I'm using you for so long, is the customer service, the knowledge, the education. And we're in this process together. It's not us versus you. Oh, we can't tell the mortgage company that. No, tell the mortgage company everything. This way, they'll be solution based. They'll get you, your answers.
We're not the mortgage police. I mean,
no,
again, we're here to help.
All right. So we got good credit. We did the mortgage application. We know we can probably afford up to $400,000, $500,000. You got us a nice loan package. It's a conventional loan, 10% down, because of my credit, because of the assets. I don't have to pay mortgage insurance. And we'll go over what mortgage insurance is later. So, but going to the next step, what are the do's and don'ts while looking at houses with my realtor and maybe putting an offer in?
Well, obviously the most important thing is, don't change your job. If you're going to change your job, call us, tell us first before doing it. I can't tell you how many times we've got to the finish line and they're like, well, we're getting a new job next week. I'm like, what? Like, you can't do that. So number one, goes back to tell us everything, whether you think it's too much. I've had people call me, I want to buy a couch. I'm like, no, do not make any large purchases. Wait till you're cleared to close. Wait till you're going to the closing table. I don't care if you do it the day before closing, but just wait. So biggest thing is, don't make any large purchases. If you're going to change your job, you need to tell us, and we'll guide you again on what you need to do. The biggest one we have issues with: cash deposits. Cash is king in many industries, but in ours, it's not. So definitely do not make cash deposits before telling us. If you have large deposits, we'll help you through on how to do that, so it is in compliance with, Fannie and Freddie guidelines. What are the other things?
We actually have the 10 commandments.
Yeah.
And it goes out to the buyers, right? So they can't say, well, you didn't tell me this. And it's, thou shalt not change jobs. Thou shalt not co-sign for anyone. Thou shalt not make large deposits, open up new credit. So there's a list of everything that they should not do. And I tell people, once they're pre-approved, don't even sneeze. Like, let's just get you to the table, because
remember when the gas prices were so high, we're like, don't spend the money on gas, but you need it for closing.
Right.
So one of the things I always tell them is that when you were a kid or going into high school, you usually got a job, an allowance. You did some work around the house, but your parents basically told you what to do with your money. So even though we're in our 30s, we're in our 40s, and some of us are in our 50s buying a house, we need that guidance. And I always tell them, I'm like, no large withdrawals, no large deposits. If you think you're going to make a big financial decision, you have to go through Mortgage Mom first to get it approved, because you could be homeless. You could not get that. You might not be able to get that house if you make the wrong, make
Right.
the wrong step. All right. So now I'm going through, I'm putting, some offers in. And of course, I'm that kind of person who likes to be on the phone. I'm checking out everything else. And, Deanne's already been through the process. She's already got me at, 6.6 interest rate, no mortgage insurance. She's got me down. And then all of a sudden I look at this ad and it's like, mortgage rates, 5.2, apply here. How do we overcome that?
Well, so the big thing with us, difference between national companies, obviously, is, at 5 o'clock, they take their laptop and they close it and they head on home. And then I can't tell you how many times we've had it over the weekends. Then they call us because we are available all the time. We're available on nights, we're available on the weekends. We are way more personable than most of these national banks. Deanne has her special touch, what she does when you submit offers for you. She wants to let people know how wonderful we are with our customer service, and it sticks out. We have a wonderful reputation in the area, which sets us aside, because a lot of times, I can't tell you how many times I've heard it. Oh, Green Tree. Oh, we're going to accept your offer because you have a Green Tree mortgage pre-approval. They know our reputation.
That's a huge thing. And I'm glad you brought that up, because when we present offers, 90% of the offers that we present, no Green Tree, Mortgage Mom, no, and they'd rather deal with somebody local with everything in-house.
Exactly.
Mike, one of the other things.
We had,
God, I'm sorry.
No, we had that ad. That's why I brought that out that one time. And when we had, I think it was with Green Tree, I think it was with you guys, and you pre-approved them. We had the good faith estimate and all that good stuff. And all of a sudden they saw this stupid ad from Wells Fargo or what it was. And they's like, hey, I want to try these guys out. And they went out there and they're like, hey, they're going to sell me on this interest rate. I'm like, all right, let me tell them to send me the good faith estimate. And it wasn't. They weren't getting the 5 point whatever it was. It was actually 6.1, but their closing costs were astronomically higher. And at the end of the day, when I showed them that, they're like, wow, they never didn't tell me that. And then I went back to, well, when you first started with Deanne, did she educate you on the mortgage end of it? And they said yes. And I'm like, then stay with who you feel comfortable with, And so sometimes that shiny object is not what it's all,
And that's a very, very important part, because everybody, they're so interest rate driven right now. And, we're in a time where these interest rates aren't going to be what they are today, right? So 6 months, 12 months from now, we're going to be able to refinance them out of whatever loan that they're in. As long as they make their payments on time, everything stays the same, credit stays good. But when you're being sold on a rate, especially a company that's not local, their reputation isn't on the line, right? I've been doing this for over 20 years. I'm very active in the community, whether it's in Florida, New Jersey, Philadelphia. And the one thing is that, we build our business on referrals, whether it's a referral from a real estate agent or if it's a referral from our current client. I mean, that's the biggest thank you that you can get is, we're not jamming people at the table. We're very open. We're very honest about, the process, about what our rates are.
Unlike them.
Right.
Yeah.
About what our fees are. And there have been people like, yeah, it was, last minute, I wish I would have came back, but you were right. And we were at the closing table. I mean, people are not going to walk away from the closing table, which, they should, but they don't because they feel trapped. But again, that's, one of the differences. And one of the things about being local is that you can come into our office. A lot of people have a bigger comfort level of bringing their documents to the office, doing their application at the office, right? And then attending closing. I mean, what's better than taking somebody all the way through the process and then doing their closing documents with them?
Right. No, and I totally agree. You hit a lot of points there. And one of the things I always tell them, like, um, when it comes to like, you want to marry the house, but you want to date the rate. The rate can change at any time. You can switch that over. But when it comes to, I lost my train of thought, but
Mike, it also, on that point where you're going, is the grants, right? Everybody's like, I can get a grant. It's $10,000. It's this, it's that, right? That grant has to be paid back. It's not free. So in a year from now, let's say even 2 years, we're at 4.5%, 5%. You closed on your house at 6.5%. If there's not enough equity in your home to be able to pay back that grant, you're not going to be able to refinance. And people have to understand that. Sure, equity's growing, but that money is not free. You need to stay in that house from anywhere from 7 to 10 years. And if you decide to sell or refinance, that money gets paid back. So some grants are extremely helpful for people. And we say, yep, might be a great idea for you to take this grant. Other people that aren't sure if this is their forever home or they're going to be there for 5 years, I don't want them to get stuck with having to pay that grant back, because there's other ways. You can get a grant from a family member on your FHA loan. You can get a grant from anyone on a gift on a conventional loan. And then you can also ask for a seller concession. I mean, on the radio show, Mark and I talk about, if you don't ask, the answer is no.
No, 100%.
There's ways to get around that and not be stuck.
Yeah.
All right. Can you guys give any advice to either first-time home buyers or, return resellers that in today's market, what we're experiencing now? So we got good credit, we applied, we're good to go, we're doing the do's and don'ts, we're putting offers in. But in today's market, whether it's Bucks County, Philadelphia, South Jersey, or even in Florida, what should buyers be concerned with when putting an offer in on a house?
Mike, when they're done with our process, they really shouldn't be concerned about anything, because, and that, I'm not just saying that, but they get a closing cost estimate, right? Which you refer to as the good faith estimate. They know how much money they need to come to the table with. They know what their monthly payment is, right? There's no surprises after you put an offer in. Now, if you're putting an offer in, let's say for 400, and you've got to be prepared to go to 440, even maybe 450 in this market. So I don't want to go that high. I don't want to spend $50,000 more. Know what that payment actually looks like, right? What does that extra $50,000 do to your mortgage payment? And are you okay with it? If you're not okay with it, then maybe go to 380, look at that market. But if you're okay with it, then be ready to do that. Be ready to maybe pay the transfer tax, right, for the seller. Maybe be ready to pay some of the commission, right? It's all about being different and thinking outside of the box. And you're the best person to get those offers accepted, between the letters and the conversations. And, your offer, when it goes in, you have the backing of Green Tree Mortgage and Team Mortgage Mom, knowing that your clients are educated. They know what the costs are. They know what their payment is. And you're going in solid with an offer, right? And then I'm calling to let them know, like, do you want an investor? Did you want your seller to have an investor come in? Or, do you want Mr. and Mrs. Smith to raise their family like you did in this home, right? The sellers have a heart. So, what's the one thing that they have to be careful of? I think with Team Mortgage Mom and you on their side, I don't think there's really anything they need to be careful of.
No, right.
Unless I'm missing the point that you want to talk about.
No,
but I mean,
no.
there's
About
no
value.
unknown.
Right. It's about value. Like,
Right.
national companies are in no way going to suggest half the stuff that you just spoke about. So everybody who bought a
Another
house
number.
between,
That's all, another number.
everybody who bought a house between the late 90s to 2000 and maybe 5, and then after 2010 knows what a seller's assist is. But no one's ever heard of a buyer assist. Well, what's a buyer assist? That's where the buyer helps the seller out. And that's what you're talking about, giving your credit back. Hey, I'm going to pay the closing cost. I'm going to pay your transfer tax. I'm going to pay your commission instead of going over 40, 80, $100,000.
Right.
You know, it's definitely going to be more affordable for you. Yeah, I mean, you're
The
not going to
goal is,
have.
you know, I know when you put an offer in, Mike, and when I talk to the listing agent, I talk to every listing agent when our client puts an offer in. You know, what do we got to do to make this happen? Like, what are your
Right.
seller looking for? I have no problem asking them. I know when it comes to the realtor side, you have great conversations, but tell me what we need to do to make this work.
Yeah, and that's one of the things that we try to do too, is we try to paint a picture on our offer. Like, we just don't want to submit an offer with a number on there. Yes, we want to put that buyer flyer out there. We want to put a picture, but we also want to sell our clients to that person, because if that
Right.
seller is someone who's been in that area for 25 years, yeah, they might not want to sell it to an investor. And maybe in the beginning they're looking at that price, that high price. Oh, I'm getting 300,000 for it. But our offer comes in maybe at 280. But then when I explained to them, I was like, look, we have a young couple here. They're getting ready to start a new family. They grew up in
Right.
this area. They, went to the school districts. They just want to continue.
Yeah.
And that their house reminded them of the grandmother's house. And they're like, oh, yeah,
It
Yeah, we
it
want-
really does matter, Mike. It
Yeah.
really
it does.
That
It does,
part.
because you're getting them on an emotional level.
Yep.
And sometimes when we're on the buyer side, especially, it all depends on what market you're in. Like, of course, the leverage is definitely on the seller side, is definitely on the listing agent side, but a skilled buyer's agent and a well-educated buyer will overcome a novice seller or a novice listing agent every day of the
Every
week,
time.
because
Yeah.
of what they know and how they can present it. Like, a listing agent basically wants to get their property under contract and not worry about it, compared to following up, calling the mortgage company, following up. I want to get on to the next deal. I want to set it and forget it and move on to the next.
I think that's why a lot of people end up choosing our company, because they don't have to babysit. The biggest, thing that I hear from listing agents working with Green Tree and Team Mortgage Mom, they're like, your communication, you're on par with everything. We never need to worry. Like, you keep us in the loop with everything. I get a lot of compliments, like how wonderful we are. And the biggest thing with, I know other title companies, working with other title companies, people worry, but I mean, with our closing team, there's never any issues with Green Tree. That's like the biggest reputation, we have
Awesome.
out there.
So what is an escrow account and how do they work?
So an escrow account basically is an account that's set up for your taxes and insurance to be paid out. And I'm glad you bring this up, because a lot of people do ask, well, what is it? And I try to explain to them that it's a bucket. And each month you make your mortgage payment, and a portion goes of your taxes go into one, portion of your insurance goes into another. After each year, your homeowner's insurance gets paid out, but the money's already in the bucket to be paid. So it's your escrow account. It gets paid out of your escrow, and your taxes get paid either in New Jersey quarterly or in Pennsylvania yearly out of your escrow account. The biggest thing, Mandy, and we were talking about this yesterday, and she goes, just remember, people forget it's their money. It's their
Yeah, right.
money. At the end of the day, you refinance, you sell the house, within 30 days, you're getting that money back. It's always your money. It's just there to secure, to pay. Unless you put 20% down, then you don't need escrows. But anything, you're not required to do them. But anything less than that, you are required to escrow for your taxes and insurance.
Yeah, and even though your insurance is being paid through your mortgage payment, it's on the buyer to make sure that when you shop a mortgage company and look for a lower price, that you're comparing apples to apples and you're not losing anything. But when we also explain them, the mortgage payment, it's broken down into 4 things. It's broken down into principal, interest, real estate taxes, and homeowners insurance. Now, there's a couple other things in there you can add in, like the condo fees, the mortgage insurance, blah, blah, blah. But what I'm getting at is the only thing that you're paying for this month is the principal and interest. That is the only thing that's getting paid for this month. that taxes is going into the fund over here, the homeowner's insurance is going over here. So this way, when they get paid quarterly or yearly, there's enough money in there to be sent out. And that's why you guys do, I guess, a yearly escrow statement, just to make sure that the
Just gonna
account
say
is
that.
healthy.
A lot of buyers don't realize that. And I try to explain to them because again, they call us in a year from now going, Kim, we got this bill from the, the servicing company and we owe all this money. Well, let's look at it. Send me your tax bill and we see their taxes has increased. So they do escrow analysis each year that people don't realize. If your taxes are going up in your insurance, they're going to want to collect a little bit more for that so that it is in there when it goes time to be paid.
Awesome, awesome. All right, I know there was one more question I wanted to ask.
The discount.
The discount points, you're correct, yes.
Okay, so Deanne, do you want to talk about this?
Sure, and again, Mike, the discount point, it's basically buying down the rate. So you hear about origination fees, you hear about discount points. That all plays a part in, at least with our team, buying down the rate. So 1%, right? When you say, well, I'm going to pay 1 point, I'm going to pay 2 points. That 1 point or those 2 points is 1% of whatever the loan amount is. So if you have a $200,000 loan amount and you want to pay 1 point to lower the rate down, you're going to pay an extra $2,000 at closing to roughly buy that rate down by a quarter. And again, it has to be a win-win, because if you're looking to refinance in 6 months or 12 months, we need to make sure that you're going to be able to recoup that money back that you're spending to buy the rate down.
Awesome.
Now,
Now, I'm sorry, I'm glad you brought that up, because I want to go into a segue of that. You say that when you're looking to refinance and a couple months later, why is it important to be a past client of Green Tree Mortgage?
So, that's one of the things to bring up. So, when you're buying that rate down, again, we're going through everything. One of the things that we go into, and then I'm going to answer your question, is when we close a loan, let's say we close your loan on July 6th. Most people don't realize that there's no mortgage payment in July. There's no mortgage payment in August. Your first mortgage payment is September 1st. So you have 2 months to put that money into a savings account to help offset that mortgage payment instead of buying down the rate. Okay. Now, when you're a client with Green Tree, as Kim was saying, all the communication, you're in our CRM, right? You're in our database. So you're getting birthday cards, anniversary cards. Congratulations on your 6-month anniversary with the home. You're getting a 1-year review. We're constantly in contact with you, making sure, that your financial situation hasn't changed. And, we go through it asking them, because maybe they might want to buy a second home. Maybe they might want to buy an investment property. It all depends on the conversation that we had in the beginning. But once you're a client, as Kim had mentioned in the beginning, we're family. We're reaching out to you. You're getting informed. You're getting information on what's going on in the market. And we're also getting alerts as to, this might be a good time for you to refinance. This might be a time for you to do this because you have equity in the property. A lot of homeowners don't actually know what the current rate is and how it's going to affect their situation 6 months from now, 12 months from now. So as a client of Team Mortgage Moms, we have an opportunity to keep an eye on the market for you and reach out to you, do an analysis, show you possibly what your savings could be, or find out what your situation is.
Right, maybe you're
Awesome.
looking to cash out, maybe they need an addition put on the home now.
Yep.
So
Great
think
point,
about
Kim.
always just stay in contact, and honestly, like the biggest thing is when those rates start dropping, we print reports, we go through them all, and we start getting on the phone with our clients, and we
Yeah.
say,
That's awesome.
this
Yeah.
is a good
That's
time
awesome.
for you.
I know bigger
just-
companies don't do that.
No,
They don't. And one of the bigger things too is with the Fed increasing the rates all the time, one of the things that you have to keep in mind is it doesn't necessarily mean that that's what the mortgage interest rate is going up. it has to do a lot with your credit cards, your HELOCs, and it's the cost to the banks is what's actually going up. So if somebody's getting buried today with, credit card debt, and now they have school payments coming on, they're paying up to 29% interest on credit cards. And that can be a big burden. So
Yes.
just because the interest rates are 6.5 right now, maybe even 7 in some cases, doesn't mean that it's not a good time to do a cash out refinance and get some positive cash flow and use that money maybe even for a down payment for another home.
Right. Good point. All right. So that basically answers all our questions. If leaving our clients, what would you leave them with? Any knowledge of why use you?
Mike, there's not going to be anybody that's better. And I put our team up against any team. I don't care who it is. We are a well-oiled machine. We have people that pick up the phone on Sunday at 9 o'clock. The bottom line is we are here to help you. You're not, like Kim said, you're not a number. We care about you. We care about your loan. We care about your family. We want to do what's best for you, because if we don't do what's best for you, we're not going to get referrals. And in this business, that's the key, right? The key is referrals. If I do a good job for you, you're going to refer someone else. If not, we're going to be out of business. We're not calling internet leads. We're hitting our database. We're educating them. We're following up with them. And that's one of the biggest pieces. We will get the job done.
That's awesome. Yeah. And that's why I've been using you for years and years and years. It's just because, not only the education and knowledge that you have, and you may see something that I didn't see that we should be doing. And it's great. That's awesome.
And another thing to add is, like, even after their loan closes and things like that, and even before their loan closes, like, we always tell them, no question is stupid. Ask us anything.
Yeah.
Any questions they have, beginning and afterwards. I have people call me all the time. Kim, we have a question. We got this weird thing in the mail. What is it? It's fine. That's what it is. It's all about the personalized relationship that we have, and with our company and with our clients and our current database and our past database and all of that. It's
Awesome. Awesome. All right. Well, it was a great Tactic Tuesday. You gave us a lot of information. Let us know how they can reach out to you.
So that's easy, Mike. You can do a couple things. You can just Google Mortgage Mom, and all of our information will come up. You can also go to our website, which is mortgagemom.net. You can also we have cell phones. We pick up 609-605-7153.
Awesome.
Thanks
Awesome.
for having us, Mike.
All right. Anything else before we go?
I think that's it.
All right, great. Have a great Tuesday.
You
And I'll talk
too.
to everyone later. And if anybody ever has any questions about real estate, mortgage, title, anything, even coaching in real estate, business opportunities, please reach out to the Mike Fitzpatrick team at 267-549-2505. Everyone have a great day.